Hi ECU students, welcome to week 2 of Business and Accounting 222. Hey listen, here's the objectives that we're going to be going through the next number of days this week. We're going to be demonstrating the use of a simple petty cash system, also called an impressed cash system, which I'll go through in a second. And we're going to identify the internal control roles that management and executives have inside of a company, along with the requirements for an auditor. Let's start by talking about petty cash sum. One of the things you have to know, and if you've been in business for any length of time now, you already understand the petty cash system. Oftentimes, getting a check to go buy something at the store, for example, it's just not practical to do that. You might use a company credit card. It's sort of a form of the petty cash system, but not exactly the same. So the petty cash system is used to distribute cash on an as-needed basis for short-term immediate buys. I've used this before if I had to take people to lunch. I've had to use it before to go buy something at a grocery store, for example, for the office. I've had to use it to buy little pieces and parts for things that we might need right away, and that sort of thing. So it's just very convenient to have cash on hand, and that's what the petty cash system is for. You'll notice that it's using an impressed system. So an impressed, let me just switch over here real quick. So an impressed system, this is simple definition, it's a cash fund set aside for minor expenses in an operation. Supplies, like I said, groceries, stamps, all those little things that might pop up. These are like non-personal operating expenses that just come up in the course of a day. And it's authorized by an impressed fund cashier. So it's obviously known as the petty cash fund. That's what we're talking about this week when we talk about these. And oftentimes you'll get a voucher. Someone might give you a voucher to go spend money. The impressed cashier, your accounting person, will give you a voucher to go spend money. You'll also recognize this. I do mostly expense reports to get reimbursed, and those expense reports are outside of the petty cash system, so it's not exactly the same thing. When you get cash from people at the workplace, that's the petty cash system at work. So for example, in this transaction, this is the establishment of a petty cash fund at this company called Davis Company. This is right out of your book, so make sure you read it. The thing I want to point out is because cash is an asset, so it increases the cash account by debiting it, and decreases the cash account by crediting it. So on October 14th, this company established a petty cash fund by withdrawing $100 of cash from their cash. They put it into a safety deposit box, something in a drawer someplace, and then they debited petty cash. So they increased petty cash and decreased cash. That's the journal entry for doing that. This week you'll also be doing a journal entry for some similar items, so I want to make sure I pointed this out to you. The petty cash, like I said, the petty cash, the impressed cashier that runs the petty cash system for your company, oftentimes will write a voucher, and it's authorizing you to go spend a certain amount of money. Then you have to bring your receipts back, any leftover change, and that sort of thing. Again, you probably know this routine because you've done it before in your workplace. The petty cash fund should be replenished at the end of a certain period. So you never want it to go all the way down to zero. A lot of companies have a maximum and a minimum. And when you get down to the minimum, it triggers who's ever responsible for petty cash. It will trigger the response to say, hey, I need some more cash. You do a transaction from cash into petty cash, and it brings it back up to a certain level. Setting that level can be tricky. So what we do at our company, when we did this, we set this up about 2 years ago now. We started small. We set $50 in the cash drawer for each of our different branches, and one branch needed more, and we validated the expenses, and then we increased the level of petty cash for them, but we didn't increase it for everybody else. It's really important to not put a lot of cash out there and trust it to have everyone have access to it. Unfortunately, cash is too easy sometimes to lose track of. It's really easy to fraud it. People can fake receipts, all that kinds of stuff. So I'd recommend, if you're going to start a petty cash system, keep it small, and then over time grow it a little bit bigger as each branch or each division needs more and more cash or less. So, and protect it. Make one person responsible for it with a key on the cash box. Let's talk about these some business applications related to auditing and control and that sort of thing. So a couple points here. Management has the responsibility to control the assets of the company. Having an independent auditor look over the shoulder of management is generally a good idea. So this means that management has to safeguard the firm's assets, ensure reliability of records, make sure that employees are compliant with all the legal requirements that are going on. Sarbanes-Oxley, from back in, I think, the early 2000s, now I forget, requires that the CEOs and the CFOs and the top executives, they have to approve the audit of, and this isn't a public company, they have to approve the audit, and they have to acknowledge that they read it and they understand it. What drove Sarbanes-Oxley a number of years ago was that some CEOs were disconnected, if you will, from the going-ons of the accounting system and the internal control system. And so they were able to say a hands-off approach. This forces the CEO and CFO, Sarbanes-Oxley does, to be fully engaged and to understand and actually certify the internal controls of the company. Now, about private-owned companies, they don't have to do Sarbanes-Oxley because they're not a public held company, but boy, is it recommended. One of the nonprofits that I ran, we had an independent auditor come in every year and audit the books. We were not required to do that, but we did that as a way to establish credibility with our donors and establish credibility with the stakeholders of our nonprofit. And it works. In fact, we had a number of donors say, hey, I'm going to give, but I want to see your independent audit. And we're able to show them the books through the independent auditor's view, show them the audit report. Okay, that's it for right now. Make sure you reach out to me with any questions you might have, and keep going strong. We're in week 2 of 16, so we're just beginning the journey down this road. But you guys got it. You can do this. Reach out to me if you have any questions. Remember, God is on his throne. He's always been there, and he always will be.